Okay, cool. So we're now recording. Hope you're well. Welcome along, everyone. Hope you're having a great trading week, whatever you're up to. And what I want to talk to you about today really is just more on entries. How can you get into the market? How can you take advantage of the market at particular times, particular days, all that kind of stuff? So a lot of us are overcomplicating entries in the market, in my opinion. Now, this is a daily time frame. The idea within the day is that you are supposed to basically guess which way each daily candle is supposed to go. For example, if you, on all of these blue days here where you saw bullish price action in these blue candles, if you were looking for buys on all these days, let's not overcomplicate it. You would have been profitable. Now, the idea when you're on a daily candle is that you're buying at the low of these particular candles, just like that. And if you are looking to buy and you're buying on this daily candle here and you're buying at the top of this candle after it has swept liquidity, which you can see right here, which is the previous day high, then you're not going to do as well as you would hope. But if you can get yourself involved on this candle and you can hold price all the way up towards possibly this area of liquidity, then you're going to be pretty successful within this industry. And then you have to trust, why is this market now moving higher? Where is this? Why did price drop all the way down to this area here and then start pumping to the upside? Well, you can see clearly price is reacting straight off that area of imbalance. Price is also reacting off of this daily order block, which sits right here. Now, it looks pretty bullish, but that doesn't mean you don't have to be looking for sales as well. You just have to understand what price is looking like for you to get in on a sell. It would be foolish to look for sales all the way down here. Now, if you at the point of you looking for sales, you've got to be looking for opportunities in here. And this is the S&P index. You can look here at the NASDAQ, and it's a similar case. You can see price has started pushing to the upside. Once again, you can see that price has reacted from that area of imbalance and in that order block, which is sitting right there as well, where the order block is the last down candle. I'm using this one here. I'm not using this little one here because that's a doji candle. Basically, what I would like to do, because there's not going to be a lot of volume in that, and there's a lot of wicks in here. The wicks are quite large. What that essentially means when you see these little doji candles is they don't offer much. The bodies of the candles are telling the true narrative towards the story. So all I'm doing to make things super, super simple, I am just utilizing both. Okay, and this would be called a proportionary order block because you've also got this order block right here. Price comes into this order block, mitigates into it, and pushes to the upside. So as you can see, price has come into that imbalance, pushed higher. Same with S&P, price has come into that imbalance, pushed higher until we've obviously reached some point of resistance. Now, it would look clear that the target is going to be bullish, but that doesn't mean that you can't take advantage of sells on the smaller time frames when the right times are obviously arriving. There are one or two other pieces of confirmation, which is something for a later date. But long story short, we need to be looking at what is going on to the left of us. So every single time when you're looking at price action, you're looking for price to sort of turn around. If you're going to see price turn around, you have to kind of understand what is going on. Now, the first thing you must understand is that this entire trading range is now in a premium sort of level. This is all discount level. Price is expanding to the upside. And the buyers are very, very overextended within price. Basically, this has been all blue. All of this has been buys, 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 all the way up to this area here. Now, once we reach this area, we started to reach an area of consolidation. So now we have to try and ask ourselves, is there any opportunity to potentially start taking price maybe to this imbalance or to this imbalance or even back down to this area here, which in turn would be a discount level? But we have to look to our left and we have to try and identify what could potentially cause price to turn around. And when you're looking for areas of interest, okay, you're looking for a point of interest. That's what POI stands for. Now, within that point of interest, you are looking for order blocks. And just to keep it very, very simple, you're looking for imbalances. There are other things you can definitely utilize, like breaker blocks. You can definitely utilize inverse fair value gaps. You can definitely utilize other things called balanced price ranges and things like that. But let's just keep it super, super simple for this lesson. Okay, we're just going to focus on order blocks and we're going to focus on imbalances. Now, if we're looking to take a sell from this time frame here, is there anything on the left which could cause this to basically come lower before it wants to reach its target of this liquidity here? Because we know that the market is always looking to seek and destroy with two different things. One of them is areas of inefficient price action, which is this area right here. And the other is liquidity, which is generally going to be this high here. But you can see we're starting to get some resistance in the form of this consolidation. Today's candle has been extremely bearish. I don't particularly care why, other than what is going on with the charts, with price action and things like that. I am not interested in all the other fundamentals, which all of these gurus may tell you is to do with price moving forward and all that kind of stuff. This is just about keeping things as simple as humanly possible. So we can see here on our left, we've got this small area of imbalance. Now, this imbalance is sell side imbalance because within this area of imbalance, which rests right here, there were only sellers in the market, which means it's sell side imbalance and is inefficient to buyers, which means it is sell side imbalance, buy side inefficiency. So as you can see, buy side buyers have come all the way back to rebalance into this area of inefficient price action. You can also see we've got this order block right here, which is the last up candle before price reverses to the downside. So knowing this now, we're inside what we would like to call a point of interest area. We've actually got the order block and we've got the imbalance. So there is definitely potential to look for price to come to the downside. And if you go over to the NASDAQ as well, very, very similar price action. It's not come into this area of imbalance yet, but it is coming into this order block. Now, there is something you should know, and this is actually very, very technical. And this would utilize this is going to help you. This is going to help you avoid potential losses within the markets. Okay, so this is information. If you've got a pen and paper, you need to write down. The order block, some order blocks are more probable than others. For example, this is a higher probability order block because you've got the engulfing candle, price was overextended, and this is now a valid order block. You can see price came into it and moved lower. Now, this order block did get some resistance moving higher. If an order block, again, write this down, if an order block has got two areas of imbalance either side of it, that makes the order block lower in probability. So that is not a good order block to use. Okay. I'm going to repeat that. If the order block has got two areas of imbalance either side of it, that is a lower probability order block. You do not want to utilize that. You do not want to touch it. You do not want to worry about it because price can definitely react from this area of imbalance, but also can violate this order block to push towards this area of imbalance within here. And if you look at the news factory, today is the 28th. We did not have any news today, but we've got news tomorrow. So I wouldn't have mind betting that if we had news today, price probably would have pushed into this imbalance and then reacted lower. So knowing what we know now, this order block is essentially a no-go. This is what brings you, hopefully, towards the S&P. These pairs, S&P and NASDAQ, are correlating pairs. So you should always look to use which is the higher in probability order block or the higher in probability imbalance. The S&P in this general situation looks a little bit healthier. So we're not just going to press, I mean, you can press sell there, but that would be an unwise thing to do because we're very, very bullish. We're definitely looking to target that liquidity. But how can we get involved within the markets on a smaller time frame? Well, now we know this is just a point of interest area. That is it. Just a point of interest area. So now our job is to basically move a little bit lower on the time frames. And what we can see is that when price, came into this order block here, you can see we need to have a look and see what happened when price actually came in here. So has anything happened which has allowed us to potentially do anything? Well, you can see that this is the consolidation phase. You can see price kind of moving lower and things like that. You can see the liquidity sweep. You can see that this is Monday's price action, clearly sweeping liquidity, taking price to The upside, so if I turn on this indicator here, this is Monday's price action. You can see the first job of Monday, which is always the manipulation day, Mondays. You can see it's swept above this liquidity within this area here. Now, the interesting thing is, once we done that, we created a weekly high. And the candle opened around about here, manipulated higher, and came all the way down, leaving another area of imbalance. And if you look inside this area of imbalance, you have got multiple entries within here. You've got multiple places to look for within this area here. And you have every single reason to believe that this is the price action that's basically going to help you within your journey. So you've made a high, okay? Tuesday was pretty much manipulation, consolidation, whatever you want to call it. Today's price action, London session, 9 o'clock, brought a high above yesterday's high, came all the way down, targeting not just this liquidity here, but this liquidity here as well. So we've now basically looking to target that weekly low. So that would be the next target for me to look for. So there's two things you can do. And just want to plug into entries and really everything they represent. And the real fundamental key to, well, the basic key to everything I look to do when I am taking my setups. And it's all to do with the fact that I am looking for a point of interest on a higher time frame. When price is on a higher time frame, on a smaller time frame, price is going to be trending higher. Going to be doing something like that. And then I'm looking for price to basically give me a reaction out of that area there. If it happens and gives me another area of imbalance or an order block, a breaker block, whatever, then I can easily look to get involved on the retest of that level to take price to its original intention. Because what I have got in this situation here, ladies and gentlemen, is extra evidence. I've got evidence that this trend in market is going to go down, because on a higher time frame, it would actually look like that. If I just turn that back to green again, that is how price would look on a higher time frame. So if I just get rid of that, and I get rid of that, and I get rid of that, that is what the daily time frame is now going to look like. If I bring it all back, that is what it's going to look like on the smaller time frame. It is as simple as that. Obviously, I'm adding in everything we teach you in the college program. I'm teaching you the optimal trade areas. I'm teaching you the imbalances. I'm teaching you the order blocks. I'm teaching you time and price and all that kind of stuff. But let's just look at what has actually happened so far, because we have had daily time frame, area of imbalance, now go into a 1 hour time frame, and we have had the exact thing. We've had that area. We've had the confirmation. We've had the break, and we've got another area of imbalance that sits within it. So we've got loads and loads of different things we could look to utilize this with. You can enter, and if I can, there's a little cool button here. You could enter at 50% of that imbalance. This is what you should be doing if you are a trader who's trying to trade within the 9 to 5 realms, and you're trying to get out of the 9 to 5 and you're trying to build up your capital. This is what you can look to do, because you only have to turn up. Bear in mind, this is at 9 a.m. in the morning. That's the London session. If you didn't get involved within that session there, you can get involved within the New York session. That blue line there is that blue candle within this area here is the New York session. So there's two opportunities to get involved. So if you're getting up in the morning for London session, you can get involved and trade here. You can just press sell, stop loss above the high. You can go above this high if you're nervous. If you're a little bit more aggressive with your trading, I don't want to say risky. If you're a little bit more aggressive with your trading, you can come above this high here, and you're literally just targeting the low. Don't think that you can't trade on a 1 hour time frame. You absolutely can trade on a 1 hour time frame, because you've got the extra piece of evidence. You have got this red line here, which is your extra piece of evidence. That green line there, that is your daily time frame. Now you're inside the daily time frame. This red line is your 1 hour time frame. That orange is your entry. So you are literally entering the market in this area here. And I guarantee over half of you in this call now are not taking entries like this. You're just targeting that liquidity. You can make a solid career out of this. A solid career out of this. But all of you are sitting on the 5-minute time frames and you're looking for these models to happen on the 5-minute time. But don't get me wrong, they happen, and I'm going to show you in a second, they happen. But guys, do yourself a favor, start making life so much easier for yourselves. But let's say you didn't take it. Let's say you missed this opportunity. Well, look, I don't even have to go to a smaller time frame. I can see what's going on already, because look, you've got this 1 hour area of imbalance, this area of imbalance right here. Just going to maybe give that a different shade of green. That is your daily time frame, like that. I'm going to just keep that like that for now. What have we got in this area here? We've got another area of imbalance. I mean, guys, come on now. This is giving us multiple entries. You've got the London session entry, which gave you this entry within a 2-hour period today. You could have entered at the start of this imbalance. You could have been in this entry from Monday, and yeah, you would have sat in drawdown. But now look, if you didn't take this entry, you could be sitting there on the 1 hour time frame. But if we go to a smaller time frame and we actually observe this price action here, well, if you look at what actually happened, this is your London session high. Price has swept lower. You can see now we've got another area of imbalance right there. So you could be pressing sell in the New York session between the hours of 8:30 New York time all the way up to 10:30 New York time in the morning. Your stop loss would need to be sensible, and you would be targeting this liquidity here for a 3-to-1, or this liquidity down here for a 7-to-1. If you took that area, if you wanted to take that entry within there, it is targeting that liquidity there. You can see that price action has, reacted from that area there, come down. And actually, what this has actually done for you, if you pay close attention now, because this green line here will indicate the daily time frame. Okay, this red line right here is your 1 hour time frame. Now, I'm going to draw another one for people that aren't willing to take trades in the 1 hour time frame, because this is your lower time frame. This here, guys, can be your 15-minute time frame or your 5 minutes. So I would say between 5 and 15-minute time frame. So actually, you've got the daily time frame, which is your point of interest. You've got the first piece of evidence, which is sitting right here, and then you've got the second piece of evidence within your daily time frame point of interest area right there. You could take that on the 1 hour. You could take that on the 15-minute. Most important thing is that you've got an imbalance on the daily time frame, which is this longer line right here. You've then got this 1 hour imbalance. You've got this particular setup in the London session, and then this one is in the New York session, which is all to do with time and price. Everything is time and price. The best setups are going to come in the London session or the New York session. You can see the volatility which happened. You can even see, and this is not random, okay? This is not random price action. Look at this. Price action now has created another area of imbalance. And this candle started reversing once it hit this area right here, which is your breaker block. That is a breaker block. If you've not looked at breaker blocks, you can go into the mentorship sessions and there's loads of videos on breaker blocks. But let's look real closely into this area here, because the second price did that, we had this blue candle here, which was originally coming into this imbalance. Price swept above it. This is in the New York PM session. This has just happened. Okay, an hour ago. Price engulfs this whole down candle, closes, it reaches up to this breaker block and then closes lower than this original up candle, therefore validating that candle as an order block. And it doesn't create an imbalance, but price comes back into this order block and then sells off, targeting this liquidity, creating more areas of inefficient price action. This is just stuff you can have on repeat all the time. You can see here on a 5-minute time frame, the entry inside that 15-minute candle, inside that order block, is another area of imbalance. There's your extra piece of evidence. So what's actually happened down here now is price has created another area of imbalance, and price has run up and done the same thing again. And why would that be that's a way horrible color, sorry. Why would that be a decent looking entry? Because if you go back up to it, it's the time and price. It's time and price. No, it's not on a discount level. No, sorry, it's not on a premium level, but it's dropping lower. You're in the expansion, it's targeting liquidity, and it's time and price. Because you had the 1 hour, which was your London session. You had this 15-minute entry was your New York AM session. And then you had your next entry here, which is the New York PM session. So I know there's going to be people now that are going to sit there and say, okay, but what is this likely to kind of do next? Because I've just given you loads of entries that you could have basically taken today. Well, now we're coming into the Asian session. And within the Asian session, we're not interested in trading it. And also, we've hit this area of liquidity. If we go back up to this 1 hour time frame, you can see we've hit this liquidity. But we've got this liquidity here to look for as well. And we're clearly very bearish. Here's what to do. Here's what to do. Delete everything. Go back up to the daily time frame. Observe what is going on. We can see, let's just mark it out again. We've got this area of imbalance. We've got this order block. And someone said, but that sale wasn't in a premium. Well, we're in a massive premium now. You can see here, engulfing all of this candle here. If we go to a smaller time frame, you can see we've actually started creating other areas. So we've actually got a lovely area of imbalance I'd look to target. So now what I would like to see happen, because essentially I know we've swept this low, but that is relative equal lows that's being created. I would like to see price essentially just slow down and slowly make its way back up. We've got news tomorrow, so maybe price dives into here and offers me that entry again, because that would be price coming back into a level. If price came back into here for the London session or the New York session or anything like that, I would be looking to get involved in a sell in that position there. Price can definitely come into there and drop, but it would be better if price would come a little bit higher into that level there to drop. But we have had a lot of liquidity. And one thing you must remember about price, once you see an expansion down, they are designed from the algorithm to have price come back in and rebalance. Okay, they're not just going to be left alone forever. These areas of imbalance are going to be taken into consideration. Now, the issue we've got is we don't know when this trading range is going to finish because we're looking at the 3 candle formation. But we have got this area of imbalance. So I am confident that the range is going to be up here to somewhere down here. If we start reversing now, that'd be awesome. So guys, hopefully you found some value from today. Hopefully this has made your life as a trader or an aspiring trader a lot more simple. Hopefully you now go onto the charts and you do not overcomplicate things. This will make your life so much easier. This will help you if you're looking at funded accounts. It will help you understand these concepts a little bit better. It will help you understand the way I trade a little bit better. And yeah, with that, guys, I'll end this recording now and I will see you on the next one.